Hi, welcome. It's Marry Ellen McGonagle, Senior Managing Director of Stocks here at Simpler Trading with your weekly Edge show. And this is the show designed to help prepare you for next week and beyond, always with an eye toward helping you outperform the broader market. So let's get started here. I do want to start by taking a look at the broader market. You want to make sure that the backdrop is healthy before you do put any new money to work. And we can see that the S&P 500 is constructively remaining above each of its shorter-term simple moving averages. Our outside momentum indicators, the RSI and stochastics, both in positive territory. So we are looking fine there. A daily chart here of the tech-heavy NASDAQ composite shows that the NASDAQ is poised to close the week above this 21-day simple moving average, and that would be quite constructive. Historically, this has been an ideal area of support. The RSI and stochastic momentum indicators also in positive territory. And from here, let's go ahead and take a look at some of the more relevant economic data that was released last week that can explain some of the activity that took place in the broader markets. However, I will tell you, it was primarily earnings reports that really moved the markets, and we will get more into that as we move on. So we did see July consumer confidence coming in 16-month high, and the Wall Street was expecting a decline. This is good news. Consumer spending is part 2/3 of GDP, so this spending will help the economy improve. And here we did see second quarter GDP coming in. The economy is now bigger than it was before COVID, and a big increase, 4 times the average quarterly increase in spending by consumers. We can also take a look. Consumer spending also came in ahead of estimates. And then, unfortunately, we did see inflation soar as Americans did get out. They did increase their spending, but it's amid a period of supply shortages as well as labor shortages that are increasing inflation. The good news is the markets did look the other way despite this high inflation number. And from here, we can take a look at some other economic data. Fed Chair Powell, very big news. He had a press conference Wednesday, and he announced monetary policy is going to remain unchanged, and this helped calm the markets as well. Next week, we have some additional, of course, information with factory and purchasing managing index. We'd like to see an increase there, pointing to economic expansion continuing. And then July unemployment, ideally, we would like this number to be lower next week. From here, let's go ahead and take a look behind the curtain, if you will. Take a look at the underlying industry groups and sectors to get a better feel for where the strength is in the market. These stronger areas are where you will want to be putting your money to work. So what I've done here is provided the 11 sectors, a 2-month daily price chart view, and then added this RSI indicator. If we sort it by descending, your stronger areas are going to be up here in this upper left quartile. Weaker areas that you generally want to stay away from or make sure that you're not exposed to are down in this lower right quartile. So we can see up here in the forefront, XLV, this is healthcare and technology, both standouts. Again, a lot of it driven by earnings reports. We will get into that. And then down here in the lower quartile, financials and energy. These are your cyclical areas that are by and large industrials continuing to deteriorate. Now, consumer discretionary is showing up as weak despite all of the strong spending report numbers that I just shared with you. A lot of it is due to a big drop today with Amazon, a heavyweight name in this index, down 8.5%. due to weaker than expected earnings. So from here, I was going to share with you the NASDAQ 100, the top performers within the NASDAQ as of the close this week. So let's just take a quick peek here. We can see up here a line, ALGN. This is the Invisalign braces. Big base breakout, definitely poised for further upside. We can see your outside momentum indicators are positive. Another name that I did want to point out subsequent to that is DXCM, Dexcom, and we can see a big base breakout, long-term base breakout, big volume, positive momentum indicators. From here, you will want to go into an intra-day chart to help guide, but the stock does have explosive growth. Look for further upside here. But the bigger point is these are both in the healthcare space. We talked about that being a strong area, primarily due to earnings. We can also take a look at technology names that really fared well. Again, all about earnings. AMD came out with explosive numbers, further upside poised there. We can see KLAC is another semiconductor stock, had a big gap up on earnings, poised to break out of a base, which is very bullish action. Another healthcare name is SGEN, CGen. Not quite positive looking on the chart, however, because it is still trading below this downward trending 200-day simple moving average. The bigger point here is that among the NASDAQ, your biggest gainers for the week were all earnings related. Let's take a look at your losing stocks this past week. And again, in the NASDAQ 100, I talked about Amazon, huge drop on their loss as far as their earnings miss. And then also we can take a look at some other stocks. Facebook came out with great numbers, but they did guide lower as far as growth prospects slowing going into the end of this year. And then we can also see PayPal, huge drop. They had a real miss on their earnings report. So in essence, what we can see here is, again, earnings driving the price action. These were your biggest losers, all being driven lower by weak earnings. From here, what I want to do is go ahead and share with you ways that you can get in front of the strength as far as these areas that we talked about, these sectors that are in the forefront relative to their peers. So we can begin here by a quick look here at healthcare. And from here, we are looking at the sub-industry groupings within healthcare. I'm going to go ahead and sort it by this stock charts technical rating. I want to see where that relative outperformance is with an eye toward uncovering stocks poised for further upside. So we can see first up is medical supplies. Here's that DXCM that performed well on earnings. Again, using that SCTR rating, we can take a look at other candidates. West Pharmaceuticals, this has been a big winner for subscribers to my MEM Edge report. And we can see that the stock had an explosive gain, again, earnings driven. The company came out with very strong earnings. Here again, when you are looking at these stocks that have either gapped up or have truly outperformed their peers based on earnings, it's really quite helpful to go ahead into that intra-day if you are considering taking advantage of potentially further upside momentum. So what I wanted to point out to you here with West is this is the opening move on the stock subsequent to its very strong earnings. And as long as WST on this 1 hour price chart remains above this shorter term simple moving average, this is a 5 hour, and I also use a 13-hour simple moving average as a guide. We can go back historically to early July. As long as the stock did retain a presence above those shorter term moving averages, it was in constructive territory. Now, the item I would point out to you here is that this moving average convergence divergence, this is a momentum indicator, is at the upper reaches of its trading range. In other words, there is, in fact, a period of consolidation that WST very much likely will incur going into next week. But as long as the stock stays above these moving averages and your RSI and MACD remain positive, we are going to be on the lookout for another leg up with positive momentum dynamics. Let's go ahead back and see if we can take a look at a healthcare stock that is in another grouping. What we were just looking at was the healthcare medical supplies. From here we can take a look at medical equipment stocks, again sorting it by that strength, that stock chart's technical rating, and we can take a look at other possible candidates. Here we have Waters WAT. This is another big winner from my MEM Edge report. The company is due to report earnings next Tuesday, but we can see the stock is in a very nice confirmed uptrend, finding support at these simple moving averages. Analysts are bullishly increasing estimates for the stock going forward. I'm going to leave it at that, but as you can see, the broader markets are generally in a constructive period, uptrending, and also earnings have been a primary driver. Next week, there are over 1,000 companies due to report earnings. However, they are not quite as heavyweight as this week's names, but overall, the markets remain in a constructive period with pockets of strength that you can take advantage of. Until next week, take care.